Good morning, everyone. So we are live now, just doing the sound check. So welcome to the Options with Options. My name is Josip Causic, and we are going to start with our agenda. So please take a moment to read the disclaimer. It's very important that if you need to stop it, you can read it. Educational purposes only, and we are going to start in a moment by showing the current market situation. And if you need to contact me, you can contact me at Trading with the UFOs at the end of the session. I will be posting my notes for agenda down here. Last time when I did the sharpening session, quite a few views happened. And without any hesitation, I'm going to disclaim that I'm going to be using three things. I'm going to be using the top platform. I'm going to be using the Word document. And at one point, I'm going to log into the Thinkorswim. So what I want to look at right now is current market. And I'm going to look at the monthly. And I'm going to look at what the price action did today, which is daily. And then I'm look at what I like to call trend lines and where we are in a relationship to the trend lines. Are they broken or not? I'm going to be looking at four markets, and these four markets are ETFs. And my goal is out of these four markets that include the Dow Jones that tracks the 30 stocks, SPY that tracks 500 stocks, and the QQQ that tracks the 100 stock, and last one, Russell small caps that track the 2000 stocks. I'm going to select one of them first, and my intention is then to look at the long synthetic, and it might be kind of surprising to you because the market is down. Like, why not do short synthetic and finance it with the bear call? But the expression buy when there's a blood in the street is what is coming to my mind. And I'm sure that out of these four, there's going to be at least two different candidates I can do. Once I evaluate these things on the top, I'm going to then log into the Thinkorswim, and I'm going to go ahead and place this. And lastly, I'm going to put it inside the position. So having said that, I'm going to open up the space that we created last time that is called 4 monthlies. And I'm going to enlarge first one, which is a Dow Jones Industrial Average, and I'm going to observe that this is a bar that represents the December. And as of now, this particular bar that is being formed includes the 2 weeks as well as a Tuesday, and it's a red. However, it has not taken out yet the low of the December. That's very significant for us to know, because right now the media is probably showing there's a lot of fear out there and that market is tanking, which is true. But on a bigger picture, we are still in an uptrend and we are going somewhat sideways. So the situation on NASDAQ is quite different, because when I was doing the sharpening session, I have marked with this blue line the low of the December, and this low of the December, as of now, this very moment, it's being pierced to the downside. So the question becomes then, should we go short, or should we recognize that maybe we're the latecomer in the game? Well, as we are having a tail on the monthly, it could be that we are late on a short trade and that this might go right back in. So I'm going to continue looking at SPY, and I'm going to approach in the same way by pointing out to you that right here is the low of December, and as of now the price action is well above it. So overall the trend is still intact on the monthly. Yes, we are having a bad week, but that week or that last 2 weeks is still contained within a range of the previous December bar. So previous December bar has taken out the November high. It has created a new all-time high in December, and right now we are still within that range. So there's no activity on monthly to worry about. Moving on to the last one, which is IWM, we are seeing that we are just about ready to break through the low. Just about ready to break through the low. So what I'm going to do right now, I'm going to just bring my sharpening session notes, and I'm going to show you that in those notes I have answered the question saying when IWM actually ends up taking 28.76, 208.76, then we will know that we are taking out. Right now we are still 2 points above it. On a monthly that's difficult, but just be aware of it that one of the things that I have mentioned in my agenda that I'm going to look at the monthly, and then I'm going to switch to the daily, and when I switch on the daily, then I can draw the trend lines, and my intention is then to work on an option that is called long synthetic, because as of now I'm presenting this more scientifically, not emotionally, and I'm looking for a line on the sand. That line on the sand, as of now, it hasn't been violated to the downside. So without any hesitation, I'm going to now minimize this, and I'm going to go back again to the Dow Jones, and I'm going to switch it from the monthly to daily. So obviously we have had a huge drop to the downside, huge drop to the downside. So we have closed on Friday right at this area here, and we open well below the low, well below the low. We gapped down, and then ever since then we went even lower. However, what is really important is that we bring the more data here, and we are now trying to draw the trend line that's supposed to point out to us what is really taking place. So are we really that bearish, or do we still have an uptrend? So if I draw this line from here to here to here, maybe I should use the actual tools on the platform that are more accurate. You would see that where this bar closed today is really, really significant. If we close below, then we know that that particular trend line is broken on the Dow Jones Industrial Average. That doesn't mean we need to pick the Dow Jones Industrial Average to do our long synthetic. We might find a candidate such as SPY. So without any hesitation, I'm going to now minimize the Dow and enlarge the SPY. And I want to observe on a SPY on the same time frame, which is a daily, what is currently taking place. So again, we need the more data points. And as we do this, you're going to observe that over here the situation is quite different. So we are marking this particular low, this particular low, and this particular low. So the day as today is the one that it's going to determine whether we have lost this uptrend that has created the low and a higher low and a higher low, and that we might actually go lower. However, if the price action closes, then we still have this particular um, area of which the market could bounce and go up, and this would be the good area then to continue considering long synthetic. So as of now, we're going to just tuck this away and look at the last candidate that doesn't go sideways, and that would be the QQQ. So on the QQQ, we're looking at more data here, and we're noticing similar situation on the daily, that we have closed at the high on Friday. And what is very interesting, we open at the low, but the size of the bar is already significantly smaller. So because the size of the bar is significantly smaller, we might actually consider placing a trade on the QQQ. So if I get more information right here, which means I'm looking all the way from about middle May, and I'm drawing this connecting the October low as well as connecting the low that has been pierced, but then we have bounced with conviction. It seems to me that this area right now that we're looking at is a possible zone of which we could actually bounce. So without any hesitation, we are now going to proceed at looking at the QQQ, and we're going to be considering long synthetic. And what is a long synthetic? Well, long synthetic, it's simply buying a call that is at the money and it has a delta of 50. And at the same time, we're going to be considering selling a put. And this is a double negative. It's still going to have a delta, but because a negative times negative equals a positive, it's going to give us a delta of 1. So at that point, we're going to have a positive 1. Now, of course, we are quite aware of the fact that this particular ETF trades for $373, and we would need to do a little bit of alteration. And one of the things that I want to do, I want to then, after I have knowledge, so I need to know how much does the long call cost. Okay, once when I know how much that long call cost, I will then try to finance it with short. And I want to use the word short because in reality it's going to be a bull put, because obviously in this particular case QQQ costing $373, that would be $37,320. So without any hesitation, we're going to now open up the chain and we're going to consider the choices that we have. So many choices are given here, but in our particular case, we should be looking at a choice that has a lot of activity. And a lot of activity can be found in February. Another thing that we're going to do, instead of showing 3 strike prices, we're going to show only 2 strike prices. And in that case, what is happening over here on our area, and let me bring here explanation, that the strike prices are listed right here in this area. And if we pay close attention, that the current price is currently trading at 373. So 373 is the current strike price, our last strike price. So two choices that we have is the 372 or 374 or 375. In this particular case, the increments go into two: 68, 70, 72, 74, 75. So having said that, let me extract that information, because in that case it is less confusing. So what I'm doing right now, I'm typing here the current price of the QQQ is being 373. So if we know that we have two sides, one is a call side and one is a put side, I'm going to then create simple explanation that the call side is on the right, strikes are here in the middle, and puts are here on this side. And we know that we looked at the numbers are 372, and the next one is 374. So 374. So if the QQQ is currently sitting at the 373, that's mean that 373 is a current price. Therefore, this one is having the value of the one whole dollar. 374 would then be what is called out of the money. The higher strike price, such as 376, would be then what is called 2 steps out of the money. On the flip side, we need to know that this would be then in the money on the put side, because when we subtract 376 from a current price of the 373, this would be then 3 points in the money. So this is then 3 points in the money. The 374 would be then value of 1. I'm going to just kind of cheat this, and I'm going to put it right here. And on 372, we will be out of the money. So the area that we are selecting is actually right here, either 372 or the 374. So having said that, let's go back now to the option chain and observe that if we are buying a put, and this put right here, 372 put right now that we are looking at, has a value of the $12. $12. That is how much we need to then finance. So the $12 is what we would like to finance. Then the question becomes, if we go ahead and then sell at a bid 372 put, how much am I going to be getting for it? So let me just now take a moment and write down that the cost is the 1242 for a long call. So we are considering right now going long on the 372 call. So we are long 372 call that has, as we pointed out to you, intrinsic value of 1, but they want $12, and that thing is fluctuating, let's say 50 cents. Now, why would they want that? Because we're picking it all the way out to the February. So the next question becomes, on a bid, when we are selling here, and that's a 372 put, we are getting how much? So I'm bringing up again the option chain, and I want to make sure that I And I'm going to make sure that you recognize when you subtract these two things, right? We then have what is called debit risk. And a debit risk is a difference of these two, right? So $12.50 is a debit. We have a credit of the $10.90, which means we're now ponying up $1.60. So that's if it's really just a long synthetic. But if we wanna turn it into a bull put spread, then we would need to have also a lower leg. And one of the lower legs is what we need to find, and we usually find this by simply looking at activity below. So what I'm going to do right now, I'm going to add more strike prices. So one more time, just to kind of emphasize this whole point. This area right here and the box is showing that we have a synthetic long. And this synthetic longs involves buying of the 372 call and simultaneously selling the 372 put. And of course, the market is live, so it's currently dancing between $1.60 and $1.14. But this is what is currently taking place. So for us now to proceed, what we are going to do, we're going to add more strike prices. And I'm now focusing more on the put side, because on the put side we have many different things here besides the strike price that we are looking at. So of course the strike prices are right in this area, right here in this area. This is where the strike prices are, and we have a volume. And when we're looking at the volume, we're seeing a lot of different activities. So we have already learned that for us, out of the money put is a put that is going to be lower than the current price of the 372. So we can add more strike prices, more spaces above, till we figure out maybe we want to do the 10-point wide, maybe we want to do 362. So if you do the 362 buying of the put, right, we would like to see then how much activity there is on a 362. So the 362 put that we are looking right here, it has this activity right here that I'm gonna encircle it. On the open interest, there's a 2,648 contracts traded. But if I just go slightly lower and I focus on a 360, the number is significantly higher. On a 360, the number is actually 68,000. And I think that's probably much better choice for us to pick. And also today's activity on it is, as of now, today's activities on it is 1,453. So I will go for a higher activity on both open interest and volume. So now I'm going to break it down, and I'm going to have a little bit of the lesson of what the bull put is. So I'm bringing up here the whole concept of what we are doing. So we are doing a bull put that is going to be out of the money. So this out of the money bull put is going to involve the strike prices that is 372. But we know that currently the QQQ is at 373. So at 373, which is above, we are already looking good, right? Because the selling of the put gives us a right to sell. But if we want to sell at a higher price, rather than to we are selling to open 372, and we're buying to open 360. That would now tie up the difference of the $12. Where we get the $12? We get the $12 of the width of the strike prices. So the strike price that we are buying is 360. So that $12 is what we are looking at. So now that I know this, I'm going to go back over here and I'm going to edit this particular spread, and I'm going to now add the option leg. The option leg that I'm adding is going to be buying, and I'm buying a put, but I'm buying the put at the 360. So now that I'm buying a put at the 360, I'm going to click the OK, and I will get my total right here. So my total right here has increased because buying the call is not being completely free. It's not being completely free because it's being financed by the bull put spread. So if I want to really just get rid of this particular leg of the buying of the call, this is going to do the math for me, and it's going to tell me right now that I'm getting here a credit of close to $4. So if I'm getting credit here of close to $4, and let me just make sure that this is clear right here. Right now about so I'm going to now explain this by again writing this thing down and not losing anybody along the way. So what I'm doing right now, I'm bringing in again the Word document, and inside this Word document, we are tying up basically that would be the $1,200, but we are getting the credit of the $4. Now the $4 we're instantly turning around and using to finance the long call. And we know that our long call is overpriced, right? Because our long call right here, it cost us $12.50. So if I know my long call that cost me $12.50 is being financed partially by this particular $4, then what we end up having here that we need to pony up $8.50. So I want to see if you have any question while you guys looking at this, because I want to pose the question, how could I get this particular trade for free? So one of the things that you can do right now, type in the chat box, how can you do that? And in the meantime, I'm going to just quickly log into the Thinkorswim because I want to actually go ahead and execute this trade in the Thinkorswim. So while I'm logging into the Thinkorswim platform that I'm going to share here with you in a moment, I'm wondering if you guys are glad that we can have a bigger size on it. And if we have a bigger size on it, that would be the best thing to do, is just to do the one contract and then add more till we get it completely financed for free. So this is a Thinkorswim platform that I'm sharing right now with you. Let's log into the paper. And yes, Mark, you're right. We can sell the 3 bull put spread, but would you consider selling a call up above? Joe, that's an excellent question, and I want to share that with you, that if something goes wrong, that would be my follow-up activity. That would be my contingency plan. But as of now, I don't want to have a contingency plan. I just want to do what needs to be done. So without any hesitation, I'm going to now show to you that I'm looking here at the February, right? This is a regular February for a QQQ that is still dancing around the 373, right? 372.61 because the market is live. So we know that we are considering right here purchasing this $12. Initially, when we started, it was at $12.50, but because the market is alive, now it's at the 12. So it fluctuates. I can adjust this, right? So having said that, that's the first step. The next step that we can do in this particular case is going to be then selling a vertical. And selling this vertical would then involve the 37372, and it would involve the 360. And there it is. There's that $4. I hope that this is clear. And what I'm going to do right now, I'm going to make sure that the size is being correctly adjusted. So I personally like to first bring in the credit and then instantly turn around and fire in the debit. So I'm going to try to be greedy. I'm going to ask for $4.10. I'm sending it in, so I'm reading this slowly. I'm selling one vertical QQQ that involves a 372 short and 360 put long for $4.10. It gives me the break-even point. That's mean even if it pierces through this, we subtract $4.10 from the 372, and we get the break-even point of the 367. 0.90. So out of the $12, they are owing me $410. Therefore, right now, all that it's going to go out of my account is $790 because they owe me that. So I'm going to go ahead and I'm going to send it. And now when I send this thing in, and I go here under the account statement, and I go under the cash, from this amount, once when I get filled, $710 is going to be missing, but that's going to be a margin because they're going to be actually using that to give me the 410. So my order is working and they're not giving it to me. I usually personally wait about the 2 minutes to pass before I go ahead and change that order. So I have sent this at 8:32 and right now it's at 8:33. So at 8:34, all I'm going to do is simply single right click over here, cancel and replace, and I'm going to lower it down by a couple of pennies. So now it's at 8:34. I'm ready to go. I'm now replacing it, and of course that alters all the numbers. So basically this number 408 plus the 792, it gives me that $12, and that $12 is the difference of this spread width. I'm sending in, and I have gotten it. Now the moment I have gotten it, I instantly click here on 1174. I'm trying to get it for a little bit less. It's 1172. Now make sure that you always check the size. You don't want to do this with the 10. You want to do this with the what? With the 1. So I'm going to make sure now that I'm getting this for 1172. No rushing. So I'm buying the 1, 372 call at 1172. I'm sending it in, and I instantly got filled. And notice what? I have actually got the price improvement. I was willing to give them 1172, but I got 1168. Now that I know this piece of information, I'm going to move this into my Word document, and then what I'm going to do, I'm going to enter that information into our position on top. So one more time, our long synthetic is composed of the two things, right? We were planning to do it at 1250, but the price have changed to the 1168. So this is information that I'm gonna make sure that I write it down. On my fill that I did on 372, I have actually gotten for 372 1168. So I have gotten the 1168, and for me buying, I bought it for 760. I bought for 760. So these are the pieces of information that I'm gonna now bring in top. So what I'm doing right now, I'm going here where it's a position, and one of the things that I can actually do here is very simple. I can go over here where we had that position, and I can first copy the long call. So all that I'm doing here, I'm single right clicking, I'm copying that position into the clipboard. So when I go into the position, and I'm going to enlarge this right here. I'm going to just simply paste. So here I'm actually pasting that information so we know that this is what we have. Now, that's actually incorrect because we need to delete this thing because I did not type in what we actually got filled. So I'm going to delete that row and I'm going to slow down here and go one more time over here. When it says edit the spread, instead of the mid, I'm going to select what I got filled. And remember, we got filled actually at for a call side. I put it in the bold. We got filled at 1168. 1168 is where we got filled. So I'm typing here 1168 is where I got filled. So now when I click this OK, I can go one more time over here and I can copy this position into the clipboard. I'm going into the position right here where it says a long call. I paste it and I have a correct information. Without any hesitation, let's now revisit what is our other spread. Our other spread involves actually a bull put. And this bull put spread, it has a leg 362 that is being bought and no, that is being sold. And what is being bought is actually 360. So one more time, that's that $12 difference, right? We're going to bring in the fill price and we're going to make sure that we use that Word document that we created, and I'm going to later on post for everybody to see 760 and 1168. Wow, coincidentally 1168 repeats twice. So one more time, we sold for 1168 and we bought for 760. So when I click this OK, there's that $4.08, and I hope that $4.08 is actually clear to everybody, because this is where we got filled in terms of our pricing. So I'm gonna one more time copy this into the position. I'm gonna make sure that that's done, and then I'm gonna down here and I'm gonna add to it, and I'm gonna add to it. So now that I have this, I'm gonna add one more leg here just for you to be aware of it, that I'm gonna follow the suggestion that the market typed in. We can sell 3 bull put spreads, which means in the moment I'm gonna be adding 2 more. So just give me a second here. I'm gonna be adding the one more option leg, and you all remember I need to add the option leg that is a long call. So that's the long call right here. So we have a 372 long call, and I'm gonna now alter this into 3. So now when I click OK, then we actually even have a profit. But again, be aware of it. This is not exactly how it's going to happen when I now go ahead and sell this, because what really matters for you, that you are aware of it, that this 1168 that we bought did not get paid completely by this 408. In fact, what I'm going to do here to make things very, very simple, I'm going to bring the calculator so you guys can see it. So 1168 minus $4.08. I'm still in the hole $7.06. So if I sell one more for $4.08, I'm going to be then short 385. But if I sell 2 of them, then I should be ahead of the game. Now be aware of it. My buying power effect is going to double. And why do I say that it's going to double? Well, because we're going to be adding additional 2,400. And this is where I find a lot of students get really, really confused. And I'm going to go back to what I actually shared with you in sharpening. If we have a stock that's $372, right, and we multiply it by 10, investing about the $3,720, it is not that much. Really, it is not that much. So think about it. My first bull put spread is tying up 1200. My second one is going to tie up another 1200, and my third one is going to tie up another 1200. So when you add this thing up, it's a 3600. So when you compare the 3600 versus how much would it cost for you to buy 10 shares, it's really not that much. So I actually feel comfortable pointing out the $3,600 on this trade right now. So I will try to just simply place the mouse here on a fill order that has already been done, create a duplicate order, and I'm not going to go nuts with two. I'm going to go in one. And I'm sending it in, but be aware of it that the price has changed. We have start lifting. If we have start lifting, it's really important for me that I do not forget to show you the chart. So I'm bringing up the chart, and I'm going to enlarge a chart, and I'm going to show you on a smaller time frame, such as 30 minutes. And you would notice that this thing is fluctuating. It's a living thing. It's going up and down. It's going up and down. So do not be surprised that my price that I was getting earlier, it's no longer at the same level. Because if it's now at a higher level as a 373.69, let me bring the one chart from Thinkorswim, you would see that when I start placing this trade, it was somewhere here around 832. Since then, we are going up. So I will leave this thing working for $4.08, but I will see if I can mimic this trade one more time and get filled. And let's try to get filled at 390. So I'm firing in. Wow, they gave me at 392, which is wonderful. I got the second one for 392, and now I'm gonna be greedier on this one. I'm gonna ask for 396. 396. Waiting. I'm gonna cancel this one because I no longer wanna 4 of them. And by the way, did you see my buying power effect, how it has changed? They're still not giving me a 396. Let me just cancel this so you would see over here what happens instantly. The moment I have canceled my second order, my buying power is still at 2,400. If I now re-enter this order, okay, the price has got away from me. I'm going to send it in. 392, 390. Now, this is a really matter of patience. Are they going to get me or not? Let's look at the price. Price is now going down. What do you think that is doing to our bull put spread? Because our bull put spread, pay attention only to the first word, is a bullish bet. It's a bullish bet. We want a price to go up. Bingo, I got filled at 392. So now, obviously, you will not be surprised if I click now on the monitor tab and you notice that my buying power effect is what? $3,600. So $3,600 is what we have earlier figured out here when we have typed in that 10 shares of the ETF, such as QQQ, that trades for $372, would cost me $3,702. I actually was able to get a way better thing. So now that I know this, I'm going to now do one more thing, and that is simply to find what was my average for these 3 orders, not counting this, but for these 3 orders. And again, old-fashioned way is simply to bring in the calculator and to add 408 plus 392 plus 392. So we have gotten the total of the $1,192, when in reality I had to have a 1168 and that is $24 difference, right? Now be aware of it. The QQQ is a beast. It's going to move, and in a few moments, you would see whether or not this thing is going to be good. So when I'm looking right here, my options, okay, and I'm going to hide this, and I'm going to open options. Be aware of it here. If I do the puts align, 1168 what I paid, it's already now trading at 1250. So tell me in the chat box, is that good or bad? Feel free to type it in. In the meanwhile, I'm going to talk to you. The one that I sold for 1122 average has gone down to the $10.80. Is that good? Feel free to type in this chat box. Yet the one that I bought, which is a 360 put, right? And I bought a 360 put for 725, I would be probably kicking myself and hating myself because that value has already dropped by about $30, right? So just be aware of it, that one of the best way to trade options is to get rid of the debit risk. And the way how you get rid of the debit risk is simply to finance it. So Mark likes that. I wonder about a Joe or a Christian or a Jeff or Orlando. If you can type in your comment, I would really appreciate it, because I want to make sure that before I post this after the session that you guys following what we actually did. We have agreed that we're going to look at the current market objectively, scientifically, and that we're going to look at the monthly, then we look at the daily, and then we're going to look at the trend line. And we notice the trend line on the QQQ, and I'm going to bring in again my four monthlies here so you will be able to see it, that did not look that bad when we switched it from the monthly to the daily. It was that particular insight that made us realize that we can proceed. Once when we had proceeded, we actually went ahead and we said, we're not going to look at the IWM, we're not going to look at the SPY, we're not going to look at the diamonds, we're going to do the long synthetic. And what is a long synthetic? Long synthetic is the buying of the call that is at the money, right? And then we went ahead and we created this whole thing so we can be more clear that this was a strike price that we have selected for both, right? We selected a 372 call that had the value of 1, but it was so overpriced because they want to have additional $10. Well, in that case, you can throw your hands in the air and be mad at them and say, like, you know what, forget it, I don't want this. But I would like to do this in such a way that I have a financing coming to me. So let me now bring in the auto climate here, because I see some of you are actually bringing that in. So without any hesitation, I'm opening up the options with options, typing in the QQQ, and observing on a QQQ where would be our 360. Our 360 would be somewhere down here, right? Our 360 would be here. And why do I need that 360? Well, I need the 360 because of one of the prices that I have selected is a 360 strike price. And the 360 strike price is the one that is giving me the right. Right to do what? Right to I'm sorry, I'm so excited to sell. While over here, the selling is me giving me obligation to buy. Okay, so we have an obligation to buy by selling of the put, right? And we have a right to sell by buying of the put, which is exactly inverse. While on my long call, I also have a right to buy, and I have a right to buy at 372. So looking at the auto climate, when this thing price lifts, and again, this is now delay data. Maybe I should bring up again the Thinkorswim platform here so it will be much more clear. On the Thinkorswim platform, we are already at the 374. So we're at the 374, and I know we're looking here only at the 1 minute chart, but you can see the trend is breaking from the downside to the what side? To the upside. So we're no longer going up. We're no longer going down. We're actually going up. So one thing that you can do in this case, just to kind of verify it, how about the majors? The majors that are part of it are Apple. Is Apple going down? Apple is going up. Is Amazon going up? Amazon is going sideways, but it's basically off the lows. So it's not going any lower, right? So it's not going any lower. How about the Netflix? Is the Netflix going up? Netflix is going up. Well, one of the short ways how you guys can look this up is you can go under the market watch. You can go here where it says visualize, and you can create a list of the things that you want to look at, right? So you can look at the major indices, and you can see over here what are the major indices are doing, right? So right now, I want to make sure that you're aware of it, that Google is also going up. Netflix, Nvidia is going up. Facebook is going up. So there's a recovery here. So we have about 8 minutes, and I want to make sure that I spend the time answering your question here. But I want to make sure that I point out to you, buying of that particular long call at 1168 already has made the $100. Selling of this $11.22 has made us about the $50. So when I go over here, my total, it's about 171. 171 on our investment of the $3,600, right? So if you would close this right now, and I'm going to divide $170 with the 3,700 by simply using the calculator. So I'm going to bring the calculator in, give myself a few minutes to answer your question. So $170. If you take it off right now, which I'm not saying I will, but like if somebody chooses to do that and goes ahead and says, I want to take that $170 because I don't know if the market is going to have another leg lower, what is that rate of return? Well, you need to multiply this by 100. So you would see that's about 4.7 rate of return in like more than an hour, right? So if you have any questions, please type it in, while I actually go and double check one more time everything here, that I'm satisfied with the way how everything looks here before I post it. I know I was promising you that I'm going to make actually 2 long synthetic, but it's better that I took time to do only one and explain it in a greater detail than if I try to rush 2 of them. What would you be targeting for an exit on that trade? Excellent question. I really appreciate that question, Mark. And I'm going to again go back to the top, and I'm going to be looking at different UFOs. So over here, I'm looking at the 144. If I bring it down to 155, 179.80, that's probably would be my first target. I would not get too overly optimistic and look at the 390. So let's now just entertain the possibility of the 380. So this is the one thing that I found very, very good on the top platform. If I put the mouse right here at the 380 approximately and single right click, and I go down where it says ascend to, it would go into my strategy builder and would pull up the strategy builder that would give me approximately the target when we're gonna appear at that level. So notice the target that has appeared right there is that we might hit that target on January 31st. So you will notice the way how I trade is super uber conservative. I really have selected the bull put spreads that you can see down here. They're listing few bull put spreads, and I have selected the bull put spread with the different strike prices. But one of them does have a 372, right? It's just the lower one that we picked the one. And the one thing, if you can take it away from today's lesson, how did I arrive at the lower one of the 360? The first thing that I did, I went ahead and I add more strike prices. And let me just pull up the 360 so you all can see it. And I'm gonna go then on not on multiple exploration, but just on one that is relevant to us. And when you're going over here to the 360s, we notice the huge activity. That 360 was confirmed when one of you said, "Hey, why don't you look up the chart and show us on a chart where is 360 level?" And when we pull up the 360 level, we actually noticed that 360 level, but I think I was on a different time frame, was exactly at I think it was a 233. No, actually it was a QQQ. This now is not showing the QQQ. Yeah, 360 level was down at that level. Okay, so it's going to be exactly at top of the flower. And I'm looking at what is last question here. Still don't know why you enter it in the first place with the auto climate down. Don't know why you enter it at the first place with the auto climate down. Yeah, for our next session, what I'm going to actually explain to you that after so many sessions down, I expect a move up. So standard deviation is now showing 3. Currently, we're at a 9. We do have a puts that are higher than a calls, but our main activity was on a bull put spread. It was on a bull put spread. So let's leave this in our paper trade account. When we do the next session, we'll kind of come back, and hopefully by then the price is going to reach 380. So thank you once again, Christian, for asking that question. Thank you for Mark for participating. Thank you, Joe. Thank you, Orlando, Jeff, and everybody. No, I did not use a matrix for this trade, but when I did use a matrix, like to find my target, it actually came up with pretty much the same target date as you can see right here. Just before I end the session, I want to show you that my target date, if I select that same area, is February. So I have arrived to the same conclusion pretty much in the same way how we would arrive if we use sessions. So one more time, on the next session, I'm gonna spend a little bit more time talking about the auto climate and my reasoning why I do that. Christian, that was a very good point that you made, and thank you for your engagement, Mark. I really appreciate it. It's the top of the hour, so I'm gonna post these notes maybe in the next 15 minutes, and I hope you had a good session. So thank you once again. Bye now.